What kind of loans are you going to offer as a business loan broker? So in case you're considering getting into the industry, becoming a business loan broker, and let's be specific here now, a real business loan broker, not a glorified referral partner, let's go ahead and have a conversation as to what kind of different loans you can offer. And I'll actually follow up with another video talking about how much you can expect to make as a business loan broker with all these different loan options. So without further ado, let's get started. Now, I'm gonna put you right on the screen real quick. I'm gonna go ahead and get started with the 3 paths of lending. I'm gonna give you that bird's eye view. It's important for us to take a bird's eye view on the whole business lending marketplace so we can get an understand first of the different paths there are out there. And if you don't know, you should know. My name is Brian Muckler-Suciano, founder of Pennington Consulting Group and also Broker Solutions Academy. I'm also the author of 3 Paths of Lending. What I got on your screen. So what does 3 paths of lending mean? 3 paths of lending is, once you look at all the different products that are available in the business lending market landscape, there's only what I call 3 ways on how you can get funding. It doesn't matter if you're looking for $1,000 or $1 million, it's only 3 ways, 3 different paths, as you call it. I've actually written a book. There's going to be a link in the description. You want to get a free copy of my book. There's an audiobook version as well, but it discusses these 3 different ways. And what are the 3 different paths? You can borrow money based on your credit. That's path number 1. Path number 2, your revenue or income, whatever word you want to use. And path number 3 is your assets. These are the only 3 ways on how you can borrow money, period. And specifically, we're talking about debt financing. I don't want you guys to get on the comments talking about, oh, I can get a grant or I can work with a venture capital. These are what you call like equity partnerships or grants. We don't fall under that landscape. We're talking about business funding, debt financing specifically. So when we're talking about debt financing, there's only 3 ways. By the way, if you don't know, this video is brought to you by Pennington Consulting Group, where we always say our goal is to help you reach your goals. So if you're looking for some funding, if you're a business, if you're looking to start, grow, or even expand your business or in need of some funding, you want to go ahead and click the link in the description below and visit us at Pennington Consulting Group. In addition to that, if you're looking to start your own business loan agency, this program is also brought to you by Broker Solutions Academy. And what we do is we help loan brokers and understand and simplify the various funding products that are available in the marketplace so they can properly serve their clients, stop the endless confusion and self-defeating pointless rat race they're currently in, and grow their business while maximizing profits by teaching them how to become a real business loan broker, not just a glorified referral partner. So definitely there's going to be a link in the description. We've worked all year long to really package this program, and it's the most comprehensive loan broker training there is. Guaranteed you're going to be successful, especially if you're going to be having me as your coach. Okay, so definitely want to check the links in the description. And in addition to that, if you're interested in some of our media services, we offer YouTube editing services. I have my team. You see how great these videos are. Come on. Okay, you look at our website. Look how good those websites are. And look at your website, okay? So if you're interested in having us work on your website, if you're interested in having us work on your YouTube or even get your social media game just right, you wanna go ahead and reach out to us. There's gonna be a link in the description on how we can partner up together to help you grow your social media presence, your web presence, so you can position yourself for success, as I always say. So anyway, what you have on your screen is kind of like a short matrix. This is something really cool here that I've created for you. A snapshot minimum criteria, minimum required for each one of these paths. You can kind of get a sense of what is needed. And this you can download for absolutely for free. On the credit-based, what loans are available? Business and personal loan credit cards are available. This is what we're talking about here. Credit cards, credit lines, that's what this product really refers to. This is a stated income product. Generally does not require any type of income verification, any type of time in business. It's basically like credit cards. It's an unsecured product as well, meaning there's no collateral that's needed. Unlike, our asset-based lending here. You can get these funded nationwide. You do need to have a great credit score, not just a great credit score, but a strong credit profile. There's another video that I discussed the minimum requirements on how to qualify for business credit cards or personal credit cards or credit-based financing in general that discusses a little bit more about that. You want to take a look at that on my channel. But, interest rates, generally you have like 0% interest rate for the first 6 months to a year. But as you can see, I don't want to make this video long, but you can download this and view this yourself. It discusses the minimum criteria required in order to qualify for any credit-based funding. Then next you have your revenue-based matrix, and this kind of goes deep. I'll break down each one of the products actually individually here in just a moment. I just wanted to give you that bird's eye view right now. We'll go dissect a little bit here in just a moment, talk about each one of the products. This gives you some brief bird's eye view of what's required. Now again, we're talking about revenue-based funding, so you gotta have some money. You can't be a pre-revenue or you can't be a startup business and qualify for revenue-based funding because lender's gonna want to see your bank statements. The lender's gonna want to see maybe your tax returns. The lender's gonna want to see your personal P&L statement, year-to-date, your monthly balance sheet, depending on the product, which we're gonna go ahead and expand on that here in just a moment. Asset-based lending, this is what we're talking about. Any type of loan that requires collateral. We're talking about real estate. We're talking about equipment financing. We're talking about stock loans. We're talking about 401k financing. There is some type of collateral that has value that the lender is willing to put that on the line in essence. So in case of default, they take whatever that is. Because think about this. I always say this. Lenders care about two things and two things only. How the hell are you going to pay me back? And what the hell is going to happen if you don't pay me back? As long as you can justify those things, you generally can qualify for any type of financing. And with all of these things, how the hell are you going to pay me back? On the credit-based funding, you have great credit history, meaning a track record showing that you can pay some of these things back. And there's limits on how much you can get funded when you're talking about credit-based funding. You're not going to get $1 million in credit cards. With revenue-based funding, how are you going to pay this back? You have a track record of income. Bank statements showing that the business is making money. Or, if you're talking about personal loan on the personal side, W-2s, tax returns, something that shows that you've been making money. There's money coming in. Asset-based lending, how are you going to pay me back? The lender looks at it as, okay, that particular, the monthly income the business still makes, and in case of defaults, they can go after the asset. In case of default on the credit side, they can go ahead and ruin your credit, with the drag three items on the credit report, which is going to drag your credit score down. On the revenue side, they can go ahead and put a lien on the business. They can some garnishments on the business. There's ways that they can collect on that business revenue. So again, lenders always trying to justify two things. And the job of an underwriter is to do what? To try to show, one, how the hell you're going to pay it back, and what the hell is going to happen if you don't pay it back? As long as you can answer those two things, you're always going to get qualified for any type of financing there is out there. Now, next, let's dissect much deeper and talk about each one of the products that are available, each one of these lending paths. We're going to start off, of course, with our credit-based lending path. And I'm going to emphasize on business credit because majority of the stuff that we do is business credit, but the minimum criteria to qualify for business credit cards is very similar to what it takes to qualify for personal credit cards. Let's actually go over that matrix just briefly before we go over the actual product. That matrix, in order to qualify for credit-based lending products, there's 4 things that the lender generally looks at. These are the 4 factors the lenders look at in order to qualify for credit-based lending products. Again, this matrix is available for you to download for free below. They look for derogatory items, late collections, charge-off, bankruptcies, tax liens, regardless of and basically what they're looking at is depending on how much amount you're looking to get funded, and then also depending on how much effect this item has on your credit score. How old it is. Is it a paid collection? The older an item is, the less impact it has on your credit score. So again, there's derogatory items is one of the factors they look at. The next thing is utilization. Utilization, this is specifically regarding any type of unsecured credit you currently have open. If you think about it, utilization is balances relation to limits on all open revolving accounts. Utilization only takes into account revolving accounts. I get into this argument where people sometimes think that they can have good credit or they can get unsecured funding without previous unsecured credit history. And it's almost impossible because you're going out there. If you're watching this video right now, if you are a CEO of a bank, if you're the owner of a bank, and if I seeked $50,000 to $100,000 in unsecured credit from your bank, you will be absolutely curious as to what my past unsecured credit history looks like. If you're seeking unsecured funding, you have to have previous unsecured credit history, emphasizing in short the importance of having credit cards. Those times of credit cards, you need to cut them off, they're not good for you. It's kind of ridiculous because credit cards are definitely very important as it pertains to even supporting your credit score. That's for a later video. Let's get back to what we're talking about here. The third factor that the lenders look for is age of file. Age of file is not how old you are based on what's on your ID, but how aged your credit profile is based on the different accounts that you have in your credit report. So that's what age of file means. The more seasoned you are, that's the financial term that they generally use is, seasoned credit. The more seasoned your credit profile is, the more you'll be able to qualify for higher limits and also different type of products, business credit cards and so forth and so on. The last factor is inquiries. Inquiries kind of goes back to that old joke. Banks only lend money to people who don't look like they need money. So if you have a lot of inquiries, definitely you look desperate. So these are the kind of, but there's no collateral required, there's no time in business required, there's no income verification. Credit-based products is an amazing product. In addition to that fantastic minimum criteria to qualify, these are some additional benefits. They generally come with 0% interest for 6 to 18 months, which is, come on, dope. as a startup business for you to be able to get $50,000 to $100,000 in unsecured funding and have 0% interest for 18 months, 24 months, that's amazing. So you can actually focus on turning your business into a profitable business instead of you getting a $50,000 loan and payments are due on the first of the month and every single month, regardless if you use the money or not. If you get a $50,000 or $100,000 as a startup, you don't use all that money at the same time. That's another thing. You pay on the amount used, which is dope. You only pay on what you use. You have access to $50,000, but if you need $5,000 or $10,000, you only pay on what you use. And cool thing is, it also helps build business credit, as you can see there, which is dope. Most people use their personal credit to fund their business. It's not the proper way to actually truly structure your business from it to get started. We understand how important personal credit is on the personal side going out there in this financial world. So set your business up correctly. Build personal credit for your business. We're building personal credit for our kids. If you're not doing that at this point, if you have knowledge regarding credit scores and the importance of having credit scores, and if you're not sharing that knowledge with your children, and that's just selfish. You go ahead and the same thing is with the business. You need to get that business started on a good structure, on a good foundation. That's the word I was looking for. So building business credit is definitely very important. And again, there's that commingling that you don't want with your accountant. Your accountant wants you to separate things over here and over here. But we tend to, as personal businesses, we tend to use our personal credit card. Sometimes we use our personal money. But we have to keep that separation. It's critically very important, especially early on as you get started. And especially as it pertains to you being able to look like a legitimate business. Whenever you seek in finance, when you have the bank statements well-structured, well-outlined documents, it's just a huge thing to be able to start building business credit and creating that separation. Another thing is they don't increase your debt to income ratio. Majority of people use personal loans or use personal credit cards. Or even use SBA loans that sometimes report on their personal credit. I don't know why SBA does that, but they do. These are some things that you have to consider. And definitely, these are some things that you have to look out for as you're navigating this business financing world. And these are some of the different benefits that are out there. Now, next, moving forward, no restriction on the use of funds. You can use funds for pretty much anything that you desire, from marketing to payroll to advertising, whatever you want to use the funds for. Does not report on your personal credit. Again, coinciding with does not increase your debt to income ratio. So business credit cards, personal credit cards, especially business credit cards specifically, that's what we're talking about there, have some great benefits. And that's one of the products that you're going to be offering. And we're going to have a later video talking about how much money you can expect to make out of each one of these different products. And that's going to be pretty dope. Next, let's talk about the revenue-based stuff. And before we talk about it, let's talk about the revenue-based matrix. Revenue-based matrix just kind of gives you a bird's eye view again of the minimum criteria that somebody needs to qualify for revenue-based products. There's a range of revenue-based products. We're talking from, there's a range of revenue-based products from revenue term loans to revenue lines of credit to merchant cash advance to factoring loans to purchase order financing to account receivable financing. I would suggest just Google up some of these terms. These are the different products that you can offer. Each one of them require different type of documentation, have different types of criteria. And this revenue-based matrix is able to give you a bird's eye view. The minimum criteria based on everything that we have there. So again, really cool, real dope. And as you can see here, the minimum time in business to qualify for revenue-based products is 3 months. This does not mean that all the products that I mentioned, you only need to be business for 3 months. One of the products out there out of that list, you only need to be business 3 months. Keep in mind, this is a bird's eye view of the revenue-based lending products. Loan limits are generally between $10,000 to $500. There's no limit necessarily, but specifically, we only do nothing less than $10,000. You can get loans for about $6,000, but for it to make sense, it's got to be a minimum of $10,000 for us, because this is a Pennington Consulting Group matrix. Moving forward, there's no loan to value because there's not specific collateral in place. This is clearly only cash based. Most businesses consider, some businesses that are tough to get loans for, are like pawn shops, law firms, maybe casinos, stuff like that. They're very, very, very different in a sense of interest rate. And so depending on the product, some products have an interest rate and some products will have a factor rate. There's another video that I discussed the difference between interest rates and factor rate and how these things are different, but also not different. And how sometimes, depending on the business needs, you might want to get, a product that is on a factor rate instead of an interest rate. You just never know. Moving forward, generally terms for revenue term loans are, you can get loans for even a month, 2 months, but they can go up to generally about 4 or 5 years. I need to update this and put months to about 5 years. So I do apologize about that. But now, moving forward, underwriting, business must be in operation. you got to be making some money. You can generally get these funded within 2 to 30 business days. Again, broad range there because we're talking about multiple different products. And that's pretty much it. This is kind of the general matrix for the revenue-based products. I can't get into the benefits of revenue-based products. There's so many of them. We'll be kind of getting lost here, but there's just so many different revenue-based products. So, and each one of them have kind of their own outline of the different benefits that they have. But this is kind of fly that I've created for some of the students that I have. By the way, Broker Solutions Academy, I help business loan brokers get started in this industry and actually become a real business loan broker, not a glorified referral partner. But this is very similar to the matrix. Specifically, a matrix for each one of the different products is something that we'll talk about in our class. Now, moving forward, talking about the different products. The concept of this video is the different products that you will be offering as a business loan broker. And hopefully you can appreciate how we peeled it back and gave you the bird's eye view of the different paths. And then now we're showing you the different matrix for each one of these paths, and then kind of discussing briefly the different products. We can get into the different benefits of each specific product. Let's go ahead and talk about the real estate asset-based lending matrix, which falls under real estate. Asset-based falls under real estate. And generally the two things that fall under assets are that you're going to be selling at the most is going to be real estate and equipment financing. This is our real estate lending matrix. Absolutely free. You can download it for free. Free. I'll give it to you absolutely free. It breaks down the 3 different types of real estate loans. I try to simplify things. I know you kind of see the 3 paths of lending now, 3 different ways of you can get any type of real estate funding. And you can see this. There's conventional loans, which are generally bank loans. These are conventional loans, is what they generally call them. Then there's agency loans. Agency loans kind of, we're referring to government-sponsored loans, SBA 504-7A, or even some Fannie Mae loans or some CMBS loans. That's what we're referring to, some type of government-sponsored loans. And then lastly, you have your private money loans. Now we're talking about hard money, if that's what you want to call it. Then there is non-conforming, and then there's also bridge loans. Bridge loans are usually short-term. I mean, all hard money can be short-term. But what this document does, it gives you kind of the minimum criteria, how the transaction is going to look like, the type of documentation required, minimum credit score, the loan to value for each one of these things. It's a powerful document that we give out there for free. Download it, link, description, absolutely free for you to download that. Benefits of real estate, I mean, come on. It's depending on what you're trying to do. There's so many different ways that you can play around with real estate, for owner-occupied, for investment properties, for maybe just leisure, whatever it is. I want to make it clear that when you're talking about real estate, we do not offer owner-occupied residential real estate. There's 2 different types of real estates that can be done. So owner-occupied meaning you cannot help somebody purchase a property that they're going to be living in. Products like FHA home loan or conventional loans for owner-occupied residential real estate. We specifically do business loans. So any type of real estate loans that we do has to be under the business. This changed in 2008. After the market crashed, there was this thing called the Dodd-Frank bill, which required you to have a loan originator license in your state in order for you to do an owner-occupied residential loan. Now, this is absolutely not required for you to do business loans purchases as far as real estate purchases, anything under the business. So I want to kind of get that clear because I know there's a lot of that confusion sometimes when people get into this business lending industry. They try to do owner-occupied residential loans, and you cannot do that unless you have a license in your state. I am licensed in the state of Arkansas, but I just don't really mess with that because as a business broker, I try to lend nationwide. I really don't deal with a lot of big personal type of financing. The only type of financing you will do on the personal side is credit card stacking, is personal loans, and these don't require a license. But anyway, I just wanted to make that disclaimer out there for all the business loan brokers as it pertains to the products that you will offer, because that is the outline of this video. Now, lastly, when we're still sticking with the asset-based lending theme, we have to talk about equipment financing. Equipment financing, we're talking about ranging from furniture to technical equipment. You can get all these type of equipment financed, generally depending on type of equipment. We can get up to 80% of the value of the equipment. On your screen there kind of gives you a breakdown. You can get equipment financing as a startup. The more seasoned your business is, the better off you are. The higher your credit score, the more terms you're going to get. The more compensating factors you have, the more better financing options you're going to be able to get. But equipment financing, definitely a great option. The matrix is available for download below in the link And these are the different types of loans you're going to offer. You also can offer 401k financing. This is a great loan offer. I haven't done much of these. In my career, been in business for over 14 years, I've done only 2 401k financing loans. I do still have to throw it out there. It is a product. It does fall under asset-based lending. I have given you some brief information about this product so you can kind of understand how this product works. But in essence, I hope I've accomplished what we came here for you to understand the different products you're able to offer as a business loan broker, a real business loan broker, not a glorified referral partner. I hope we're able to do that. Again, links in the description of everything I just discussed today. I appreciate your time, like always, and I'll see you in the next video. I'm out. Anyway, if you stay with me through the end, I appreciate you. I really do. Please go ahead and give me a like to the video, subscribe to the channel. And I guess I should go ahead and pay some bills. Let you know what this video is brought to you by our sponsor, Broker Solutions Academy. There's going to be a link in the description. We work with people that are interested in becoming a business loan broker. We have a very comprehensive business loan broker course, and we're going to be teaching you everything you need to know about how to become a business loan broker. Our mission statement is we help business loan brokers understand and simplify the various funding solutions that are available in the marketplace so you can properly serve your clients, stop the endless confusion and self-defeating pointless rat race they're currently in, and grow their business while maximizing profits by teaching them how to become a real business loan broker, not just a referral partner. This video is also brought to you by Pennington Consulting Group, and that's where we work directly with entrepreneurs and also business owners to help them get funded. So if you're looking to start, grow, or even expand your current business, Pennington Consulting Group, there's going to be a link in the description where you can go ahead and schedule a time. And like we always say at Pennington Consulting Group, our goal is to help you reach your goal. Again, thank you for joining me today, and I'll see you in the next video.